We've all been there. You do the homework, you pick the stock, you hit buy, and you watch it climb. But then that little voice starts creeping in, doesn't it? When do I sell? It is, without a doubt, one of the hardest questions in investing. So today, we're going to build a framework to finally answer it.
You know, it's kind of funny when you think about it. We pour all this energy into figuring out what to buy. We read reports, we watch the news, but the plan for when to sell, for most of us, it's pretty much just a gut feeling. And that's a huge problem because the exit strategy is where you actually lock in your gains or your losses.
Okay, here's our roadmap. First, we'll tackle why selling is so tricky in the first place. Then, we'll build what I like to call your personal investment compass. After that, we'll get into the real strategic reasons to sell, look at the emotional traps you have to avoid, and finally, nail down the single most important rule to guide all your decisions.
So, what is it that makes selling so dang difficult? Well, it's not about the charts or the spreadsheets. It's actually a battle that's happening right between your ears.
You've got two forces at play. On one shoulder, you have fear. It's that little voice screaming, "The market's dropping, sell everything now!" And on the other shoulder, you've got greed, whispering, "Just a little more, let it ride, don't miss out." The thing is, both of them are absolutely terrible financial advisors.
So how do you tune out those voices? Simple. You create a plan before the emotions kick in. Think of this as your personal investment compass. It's the thing you pull out that keeps you pointed true north no matter how wild the storm gets.
First things first, your time horizon. This is huge. A 25-year-old saving for something 40 years away can pretty much just shrug off a market downturn. But a retiree who needs to start pulling cash out in a year or two, they have way less time to recover from a big drop. Knowing which one you are fundamentally changes the game.
And next, you got to have a really honest chat with yourself about risk. I mean, really honest. If your portfolio took a 20% nosedive tomorrow, would you be staring at the ceiling all night, or would you be okay? Knowing that sleep-at-night number is absolutely crucial for building a strategy that you'll actually stick with.
All right, so you've got your compass calibrated. Now let's get down to the nitty-gritty. What are the actual logical reasons to hit that sell button?
Just take a look at this list. You'll notice that none of them say, "because you saw a scary headline," or "because your neighbor told you to." These are all proactive, planned decisions. Maybe a stock did so well that it's now a huge, risky part of your portfolio, so you sell a little to rebalance. Or, and this is a big one, you sell because the whole reason you invested in the company just isn't true anymore.
This is exactly why buy and hold can't mean buy and forget. Things change. Companies change. I mean, let's talk about the classic cautionary tale. Enron. Back in its heyday, this company was a Wall Street superstar, a blue-chip stock that seemed like it could do no wrong.
And then, the truth came out. The fundamentals, the real numbers, the real business practices were a complete lie. Once the massive accounting fraud was exposed, the stock didn't just drop, it was annihilated. It's a brutal lesson that you have to keep an eye on the story behind the stock ticker, because when the facts change, your thesis has to change too.
Now, some investors also use what are called technical signals, basically patterns on a stock's price chart. And one of the most infamous ones has to be the death cross. Yeah, sounds dramatic, right? But all it is, really, is an indicator that a stock's recent momentum is getting weaker than its long-term trend. It can be a useful warning sign.
And this isn't just some abstract theory. Look at this recent example with Intel. In early May 2024, that exact death cross pattern showed up. For an investor using that as a trigger, that was the signal to sell. And what happened? The stock dropped by about a third over the next few months. Now, it's not a crystal ball, it doesn't work every time, but it's a tool that some people use to enforce discipline.
Okay, so we've covered the good, logical reasons to sell. Now we have to talk about the bad ones, the emotional landmines that can absolutely wreck your portfolio. This slide says it all, really. It shows the two very different paths you can be on. On the left, you're just reacting. You're getting tossed around by panic, by hype, by noise. On the right, you're the one in control. You're executing a plan that you made when you were calm and rational. You always want to be on the right side of this slide.
Oh, and we have to talk about FOMO, the fear of missing out. It's that awful feeling you get when some stock is going to the moon and everyone but you seems to be on board. It is so tempting to just jump in and chase it. But the best defense against FOMO is having a plan you actually believe in. Your strategy acts like a shield against making emotional decisions based on what everyone else is doing.
So, when you put this all together, what's the one thing you need to remember? What's the big takeaway that should guide you from here on out?
It's this. The absolute best time to decide when you're going to sell a stock is the day you buy it. You set the rules of the game when you're thinking clearly, when you're not emotional. That pre-made plan becomes your anchor in the storm. It's what keeps you from getting thrown off course when the market gets chaotic.
So I'll leave you with this one final question. Go and look at your own portfolio right now. And for every single thing you own, ask yourself, do I have a clear, predefined reason to sell this? If the answer is no, then you don't really have a strategy. You just have a collection of hopes. And in the world of investing, a plan will beat a hope every single time.